How do you identify momentum trends? And are these theme-based or sector-based? I saw in your presentation you were mentioning something like, the sectors possibly to look forward to could be tech, green energy, manufacturing. So how does this work?
So to measure the momentum of any stock, what you do look at is you look at price returns over a certain time horizon. Typically, you look at price returns from 1 month to, let's say, 12 months with different windows in between, right? And you look at how good those periods are in terms of just the price returns over that period and how consistent are those returns. So the more positive those returns are and the more consistent those returns are, that means the stock has better momentum. It's a well-established trend. And the same thing on the downside. The more negative the returns and more consistently negative across time horizon, the poorer the stock could be going forward. So that's how you rank stocks based on momentum. And what happens is typically when themes start working, or it is more bottom up. So when you see, let's say, all power stocks doing well, then that it automatically becomes a power theme. You never go hunting for a theme. It is more bottom up. So if you see a lot of PSUs doing well, it can become a value theme. And so on and so forth. So you never go hunting for themes. Themes are just coincidence or outcomes of what you see at a stock level. And so you try and it's more bottom up rather than top down.
Do you add filters beyond that? Like you've got price action. Price action, like you said, could be 1 month, 3 months, 1 year, 10 years, whatever. And you will need for a set of conditions to be satisfied. Like 1 month needs to be positive, 3 months need to be positive, whatever it is. Okay. Are there any more filters that you add?
So typically when we design our universe, what we do is we do a couple of checks. First, the benchmark for the strategy is Nifty 500. So we start with 500 stocks. And then we'll do basic checks like we want to ensure that the liquidity across the spectrum is good enough. And when I say good enough, even during good days and bad days, and you don't want to see liquidity kind of dry away.
Right.
So we will filter stocks based on liquidity and how stretched liquidity can get. And obviously, other thing is if stocks have recently IPO'd, then you don't have the necessary price history to calculate momentum, in which case those stocks would be out of your universe till you get the necessary price history. So those two are the main kind of filtering criteria to decide our universe. Once the universe is decided, then we calculate the momentum score for each of those stocks. And the logic is fairly simple. Higher the momentum score, higher will be the weight of the stock in the universe, in the portfolio, and lower the score, the stock would probably have a low weight or would not figure in the portfolio at all. But to decide the weight, then we use a few other risk criteria to kind of figure out what the weight of that stock in that portfolio will be.
Yeah, very interesting. So, whenever anyone talks about momentum, I remember the adage, the saying that we have at least in the Bombay Stock Exchange, very Gujarati, Bhav Bhagwan Che.
Absolutely.
That's it.
Yeah.
So I don't look at annual reports. I don't look at profit and loss. I don't look at valuations. I don't look at all of that. The price is all that I see. And, maybe I'll add some few filters here and there, like you said, price history, IPO, etc. But profits, earnings and all that. Is this how it is, or is that also a layer that can be added?
That's a layer that can be added, but that changes fundamentally the nature of the product and the nature of the portfolio that you get and the risk profile of that product. So I manage another fund which is called the Axis Quant Fund, which is kind of a blend of styles. Whereas this is completely momentum driven. What you alluded to is more a blend of styles, whereas this is momentum in its very raw form, right? So here we are saying the stock could be doing well for whatever reason, but as you hit the nail on the head, price is the king. So I'm going to go with what the market says. Market is always right, or to put it the other way. And so we'll take it from there.
Yeah. While I have you here, and since you mentioned Quant, tell us about Quant. What is Quant about? Like, what are Quant funds about? What is their process like? How is it different from momentum?
So quant funds, momentum is a type of quant fund. So quant fund by definition is a systematic offering. It's a rule-based algorithmic approach to portfolio construction, stock selection and portfolio construction. And what you have here is inputs that are all data-driven. You can have several different approaches, just like no two growth managers are same, no two value managers are same, no two quant products are the same. So each house can design quant fund that suits their taste, right? So you could have a quant fund that is biased towards quality. You can have a quant fund that's balanced, as in case with my Axis Quant Fund, or you could have a quant fund that's momentum driven, right? Which is the case with Axis Momentum Fund.
Sure.
So quant at a top level basically means offerings where there is no fund manager sitting down and saying, I like stock A or I like sector A, let's put that to work. So you avoid some of those emotional biases in there, and it's more driven by a rule-based algorithmic approach.
Very interesting. You mentioned fund manager. You mentioned particular approaches. It just feels like we are taking the personal element out. Like classic stock investing would always be bottom up, finding that value thing, going into price earnings, applying a lot of your human thinking to it. Whereas this seems to actually take those core things out, and apply a more unemotional, unbiased way of looking at things. You think that's, it just seems like an era is ending, or will that also continue? Will this also continue?
So a slight modification to what you said previously, I would actually put it as saying you take some of the great things that fundamental managers do, which is look at earnings, look at quality, look at how's the valuation, but you do it in a much more systematic way. What you're taking out is the part of doing channel checks, going and meeting companies and so on and so forth. So fundamental manager, that's why the way the two approaches differ is, fundamental approaches prefer to take extremely concentrated positions because they know the in and outs of a company. Whereas with quant, because you're betting on probabilities, right? A stock that is cheap, has better quality, has better growth, should do well. So now you don't want stock-specific risk. So the sizing, if you compare a quant portfolio versus a fundamental portfolio, would always be on the lower side because I don't want to take stock-specific. I don't want to take too much stock-specific. That's the difference. But otherwise, I kind of agree with most of the things that you mentioned.
I used to be a sell-side analyst. It looks like my ex-job, might have a expiry date soon. I don't think you would really need to speak to analysts for this, right? Because they are the guys who do this channel check, talking with management, arranging roadshows, etc. Whereas your approach seems to be more about just price and other factors.
Correct. But in a lot of cases, we are working on the data that the sell side puts out in terms of data, in terms of earnings expectations and so on and so forth. And also to put things in perspective, in US, quant has been around for a long time, right? It's never about extremes. I think they both have a reason to exist.
Sure.
And they both will continue to exist because each of them have their own strengths and they have their own cycles. So actually having both these funds as part of your portfolio really helps in diversification, because the kind of ideas that you capture with one, you probably don't capture with the other. The overlap is lesser. So it's like saying instead of having only one sector in your portfolio of funds, you're going to have a multi-sector approach.
Sure.
So I think the parallels are there between fundamentals and quant. So I wouldn't go the extreme, be it with fundamentals or quant, or for that matter, even active versus passive, which is again
a separate, much bigger debate that's been happening.